Chicken Genius Singapore just predicted exactly when he believes the markets will reach the bottom, meaning this is the time when he will go back in stocks from his cash position. Let's dive in.
It's going to be a bad year for 2023.
What's your net position at the moment? Are you net long, net short? Like
I got some shorts on, but mostly in cash, like 80% cash. You know, I cashed out of my major position in Tesla.
Yeah.
I've been busy buying some crap, which are, you know, because, you know, in such bear market, you realize the rich people gets flattered. Like if you look at the real estate, the premium housing at Marina Bay Sands has come down significantly a lot more than the like the HDB houses in Singapore. Yeah, if you look at that. So like the expensive market kind of got cheaper, so I've been buying in some NFTs.
the solid stuff, you know.
He said crap. To his credit, he said crap. Yeah.
It may sound funny, but if it makes money, nothing funny about it. Let's see when Chicken Genius decides to exit this position, and then we will see how it all turned out.
Last time you shared you bought a mutant ape, right?
Dude, I got 5 now.
5. How they multiplied or what happened?
Yeah, but I bought at the bottom. Now it's been going up.
Really?
I think I've as liquidity issues aside, I think I've doubled my money in
Really?
apes. Yeah, yeah. When I posted that, it was like at the bottom.
Uh-huh.
Yeah, so it's
Wow.
a good
Good
move.
for you.
Yeah, congrats.
yeah.
Maybe NFTs are back.
At this moment, I'm not really interested in NFTs or cryptocurrencies. Later, I will spend some time on those. But at this moment, I just look at Tesla and I see returns that boggle my mind. I mean, I expect at least a 10x before the end of 2030, and it's significantly more than 10x. I'm just saying 10x because if I say more than that, it just makes me sound a little bit ridiculous.
So how do you think 2023 is going to turn out?
I have a graph in my head where we'll bottom at the end of Q1 towards Q2. That will probably the last time I will start to buy the dip. That will be the time where I'll start entering the market.
I have a spreadsheet where I track people's predictions, and I just put this prediction on the spreadsheet. Let's come back end of Q1, Q2 next year, and let's see how it's going. I, in the meantime, will continue to dollar cost average.
Roughly around there, because you know, other than looking at back past histories of how long crash occurs from CPI numbers surging past 3.5%, and there's many similarities. I even talk on other podcasts where it looks like the 1929 crash, that kind of stuff. So we have a lot of similarities, and that's from the book from Ray Dalio. We were talking about him over lunch. Yeah. So I have a lot of, as much as I like to talk, but I mean, you know, serious note, I think that the bottom will come in about the Q2 to Q1 range, about there.
If we are going to have a crash similar to 1929, oof, we are looking at a crash that is more than 80% down. This is one of the reasons why I never, ever use any kind of margin. You would think you could use margin if you put money into S&P 500, but even S&P 500 can crash almost 90% or somewhere in that range from all-time highs. At least we have one instance of that happening before, so I never use any kind of margin ever. But if you dollar cost average, you are still just fine. This is not financial advice, of course. Number one investment that you can make is always in yourself. Upgrade your skills, upgrade your education, do something to improve yourself. Number two, for me, businesses, my own businesses. Number three, for me, Tesla stock. And number four, S&P 500.
And you know, look, everything is down. And this is the time that you probably might start to look at things that you really want to invest, because when everything is down, the only things that are strong are left behind.
Yeah.
And this is the best time to pick it up, and this is you just take this time to buy.
Yep, recessions, bad ones, really show which companies are very strong. And I believe, not financial advice, of course, Tesla is going to be one of those extremely resilient and strong companies, a company that is able to grow even through a recession.
Yeah, so I mean, this is probably one of the best times to accumulate good assets out there, the things that you believe in, yeah, that will stay for long. So, I mean, that's just my rough take of 2023. Although I agree with Glenn that there might be a second, if the Fed doesn't keep at it, we are going to get a second run in inflation. So that's my biggest concern. Yeah. So I think the whole world is looking at Powell, how well he does his job. And if he starts to shake a little bit, that's my biggest concern. When Powell starts to shake, like he starts to, feel that he's scared to crack the economy, the US dollar is going to dump. Because nobody's going to trust the US dollars. And that is one way down. And I'll just monitor Powell, what he does, and I'll react accordingly.
As of tomorrow, it's going to be key. Yeah.
I agree with Chicken Genius Singapore here. I don't like high interest rates, but inflation, high inflation, persistent inflation, that I like even less. That is absolutely terrible. So even if you have some serious pain short term because the interest rates are higher and Tesla stock may still suffer, but keep in mind, all of the other stocks, I believe, would suffer a lot more than ones that are competing with Tesla. So high interest rates, actually, I really like that for Tesla. Long term, short term is going to be painful if they keep increasing them, though.
If you look at, actually, you make a good point. If you look at the rate of change of interest rates hike, I think this is the highest ever. Something like that. There was a chart on this. I remember seeing.
Yeah, even Elon Musk responded to this tweet showing how fast the interest rates have been increasing. And remember, for Tesla long term, this is actually the best thing that can happen. This crushes, absolutely obliterates all of the other competition. Bad for Tesla short term, long term, it removes all of the competition. So you can see that based on interest hikes, including 1983, since then, the one that we are having right now is by far the fastest increase in interest rates. Bad for stocks, including Tesla stock, short term, long term, it's really good. And these are 48 reasons why I only hold Tesla stock in my stock portfolio. My name is Matt Pocius. Like and subscribe if you haven't yet, and I will see you in the next video. Thank you so much for watching.